In exactly 24 months, a quiet alarm will go off in millions of Canadian households, but it won't be the sound of a morning wake-up call. It will be the sound of a financial trap door swinging shut. Most Canadians are currently living in a state of suspended animation, protected by the ghost of 2021's ultra-low interest rates. But as we approach 2026, nearly $900 billion in mortgages are scheduled for renewal, and the math simply does not work. This isn't just about higher payments, it's about the structural disintegration of the Canadian middle class. We have been told that inflation is cooling and that the worst is over, but there is a shadow fact that the mainstream media refuses to touch. The gap between Canadian productivity and our debt levels has reached a terminal velocity. You feel it every time you walk into a Loblaws and see a block of cheese priced like a luxury handbag. You feel it when you see your property tax bill or your insurance premium skyrocket. This is the financial storm of 2026, a convergence of debt, taxation, and stagnant wages that will redefine what it means to live in this country. Are you truly prepared for the moment your monthly obligations outpace your take-home pay? Or are you just hoping the Bank of Canada will save you? Spoiler alert, they can't. To understand the 2026 cliff, we have to look at the debt-to-income shadow. Canada now holds the dubious honor of having the highest household debt-to-GDP ratio in the G7. For decades, we treated our homes like ATM machines, fueled by the delusion that interest rates would stay at zero forever. But the bill is coming due. In 2026, those who signed 5-year fixed rates at 1.9% or 2.4% will be forced to renew at levels that could double their interest expenses overnight. For a family in the GTA with $1 million mortgage, we are talking about an extra $1,500 to $2,000 a month just to keep the same roof over their heads. Where does that money come from? It comes out of the grocery budget, the RRSP contributions, and the local economy. This is the visceral pain of the disappearing middle. You work 40, 50, 60 hours a week, yet you find yourself falling further behind. The Canadian dream has been replaced by a Canadian treadmill, and in 2026, the speed is about to be turned up to a level most people can't maintain. The open loop here is simple. If the backbone of the economy, the middle-class spender, is forced to divert every spare cent to a bank interest payment, what happens to the rest of the country? The answer is a ghost town economy. Let's talk about the Loblaws effect. It's become a meme, but the reality is far more sinister. The cost of living in Canada has decoupled from reality. While the Consumer Price Index claims inflation is hitting targets, anyone who actually buys eggs, milk, or meat knows better. We are witnessing a systemic erosion of purchasing power. The average Canadian family is now spending significantly more on basic sustenance than they were just 3 years ago, yet their wages have largely remained flat when adjusted for the real cost of housing. This is the quiet starvation of the middle class. It's not that people can't afford food at all, it's that they can no longer afford the quality of life they were promised. The stress of choosing between a healthy grocery cart and a utility bill is a psychological weight that is crushing the spirit of the nation. We are seeing a rise in food insecurity among people earning 6-figure salaries. Think about that for a moment. In a G7 nation, a $100,000 income is no longer a ticket to stability, it's a ticket to the struggle. And this is all happening before the 2026 mortgage renewals hit. When that extra $2,000 a month vanishes into interest payments, the grocery store will become a battlefield of impossible choices.
The Bank of Canada is currently trapped in a monetary pincer movement. If they lower rates too quickly to save the housing market, the Canadian dollar will plummet against the USD, making every imported good, from your iPhone to your winter boots, drastically more expensive. If they keep rates high to protect the loonie, they trigger a mass default event in 2026. This is the shadow fact the central bank won't admit. There is no soft landing. They are essentially choosing which part of the population to sacrifice. For the younger generation, the rent trap has become a permanent state of being. In cities like Vancouver and Toronto, rent now consumes 50 to 70% of a median after-tax income. This is not sustainable. It's a wealth transfer of historic proportions, moving money from the pockets of young workers into the hands of an aging landlord class and institutional investors. But in 2026, even the landlords will feel the squeeze as their own debt costs balloon. We are approaching a moment of social friction, where the disparity between those who own assets and those who trade their time for money becomes a chasm that cannot be crossed. This is the emotional pain of the modern Canadian, the realization that the rules of the game have been changed mid-match, and the referee is the one who changed them.
Taxation in Canada has become a secondary inflation. The CRA's recent changes to capital gains taxes and the relentless bracket creep mean that even as you earn more to keep up with costs, the government takes a larger percentage of your effort. The tax bite is becoming a tax maul. For many Canadians, the TFSA and RRSP were seen as the ultimate shields, but as the cost of living explodes, many are being forced to raid these accounts just to cover emergencies. This is a double tragedy. You are losing your future security to pay for today's survival. And let's not forget the carbon tax and its cumulative effect on the supply chain. Every truck that brings food to your city, every tractor that plants a crop, and every furnace that heats a warehouse is paying that tax, and it is passed directly to you. In 2026, as the federal government struggles to service its own massive debt, now over $1.2 trillion, the pressure to find new revenue sources will be immense. Expect more shadow taxes and fee hikes. The middle class is the only remaining deep pocket for the state to pick, and the 2026 storm will provide the perfect cover for even more aggressive fiscal policies. The question you must ask is, how much of your labor actually belongs to you anymore?
Canada is suffering from a productivity paralysis. While the United States has seen massive growth in tech and innovation, Canada's economy has become a one-trick pony: real estate. We have stopped building things, inventing things, and refining things. Instead, we trade the same houses back and forth at higher and higher prices, mistaking equity for wealth. This is a fundamental flaw that will be exposed in 2026. When the housing market stalls due to the renewal cliff, the primary engine of the Canadian GDP will seize up. Our GDP per capita is already shrinking, meaning that while the total economy looks like it's growing due to massive immigration, the average individual Canadian is getting poorer every year. This is the visceral feeling of stagnation. You see new towers going up, but you see fewer people being able to afford to live in them. You see more people on the streets and longer wait times in emergency rooms. The infrastructure cannot keep up with the population growth, and the economy cannot produce enough high-paying jobs to support the cost of that infrastructure. We are becoming a low-trust, high-cost society, and 2026 is the year the cracks become canyons. The curiosity gap here is, what happens to a nation that forgets how to produce and only knows how to borrow?
The Great Canadian Brain Drain is no longer a myth, it's a survival strategy. We are seeing an unprecedented exodus of doctors, engineers, and tech workers moving south of the border or overseas. Why would a young professional stay in the GTA, paying $3,000 for a one-bedroom apartment and 40% in taxes, when they can earn 30% more in Texas or Florida with a lower cost of living? This human capital flight is the silent killer of our future. Those who remain are left to carry the tax burden of an aging population and a crumbling healthcare system. In 2026, as the financial storm peaks, this trickle of departures will become a flood. This is the ultimate shadow fact. The people we need most to solve our problems are the ones with the most mobility to leave them behind. If you are a middle-class Canadian who feels stuck, you are not alone. You are witnessing the hollowing out of the nation's intellectual and economic core. The pain point isn't just your bank account, it's the loss of community and the sense that the best days of this country are in the rearview mirror. As we move closer to the 2026 cliff, the choice between staying and struggling or leaving and thriving will become the defining conversation in every household.
Let's dive into the equity mirage. For the last decade, Canadians felt rich because their homes gained $100,000 in value every year. This wealth effect fueled a massive boom in consumer spending, from new SUVs to luxury vacations. But equity is not cash. You cannot eat your drywall. In 2026, as the mortgage renewals force a repricing of the entire market, many will find that their wealth was nothing more than a digital illusion. If you have to sell your home because you can't afford the new 6% interest rate, and everyone else is trying to sell at the same time, that equity evaporates. We are looking at a potential negative equity crisis for anyone who bought between 2021 and 2023. Imagine working for 5 years, paying your mortgage every month, only to find out you owe the bank more than the house is worth. This is the visceral horror that keeps people awake at 3 a.m. It's the feeling of being trapped in a sinking ship with no lifeboat. The banks know this is coming. They are already increasing their loan loss provisions. They are preparing for the storm. But are you? The curiosity gap here is, what is the shadow fact about bank deferrals and the hidden negative amortization that is already building up like a ticking time bomb in the Canadian banking system?
The negative amortization scandal is the largest hidden threat in Canadian history. Right now, there are tens of thousands of homeowners with variable rate mortgages whose monthly payments aren't even covering the interest. Their mortgage balance is actually increasing every month. The banks have allowed this to prevent a mass default today, but they can't let it go on forever. In 2026, these borrowers will hit their trigger point. They will be forced to either make a massive lump sum payment of $50,000 or $100,000, or see their monthly payments double or triple to get back on track. This is the shadow debt that isn't showing up in the official default stats yet. It is a silent cancer growing in the balance sheets of the big 5 banks. When this hits in 2026, it will be a shock to the system that makes 2008 look like a rehearsal. The emotional pain here is the betrayal. These homeowners were told that rates will be low for a long time. They trusted the institutions, and now they are being led to the slaughter. This isn't just a financial crisis. It's a crisis of trust. And once trust in the system is gone, the social contract begins to unravel. What happens when a generation realizes the government's advice was the very thing that ruined them?
Infrastructure in Canada is at a breaking point. We have added millions of people to our population in a record short time without building the hospitals, roads, or transit systems to support them. This is the hidden cost of growth. You see it in the 12-hour ER waits and the gridlock on the 401. It's a quality of life tax that everyone pays in time and stress. By 2026, the strain will be unbearable. This is a visceral pain point for every Canadian. The realization that the services you pay for with your high taxes are no longer there for you when you need them. The middle class is being squeezed from both ends, higher cost to live and lower quality of service from the state. This leads to a survival of the richest scenario, where those with money opt out of the public system for private healthcare and private schools, leaving everyone else in a crumbling shell of a society. The shadow fact here is that the government's 2026 projections for infrastructure spending don't even cover the maintenance of what we already have, let alone the expansion needed. We are essentially running a national Ponzi scheme, where new arrivals are used to pay for the liabilities of the old system, but the math is finally running out of runway. Let's talk about the energy paradox. Canada sits on some of the world's largest energy reserves, yet Canadians pay some of the highest prices for fuel and heating. This is a self-inflicted wound, caused by regulatory hurdles and a lack of national vision. In 2026, as global energy markets remain volatile, the cost of heating a home in a Canadian winter will become a major driver of poverty. For the middle class, the heat or eat dilemma is becoming a reality. The visceral pain of shivering in your own home because you can't afford the carbon-taxed natural gas bill is an indignity no Canadian should face. Yet, this is the path we are on. The shadow fact is that Canada is the only major energy producer that doesn't prioritize its own energy security for its citizens. We export our resources and buy them back at a premium. This inefficiency is a direct tax on the middle class. As the 2026 storm approaches, the cost of energy will be the final nail in the coffin for many small businesses that simply cannot afford to keep the lights on. When your local coffee shop or independent grocer closes, it's not just a business gone, it's the fabric of your community being torn away.
The small business massacre is already underway. Most people don't realize that small businesses are the largest employer in Canada. But these businesses are currently drowning under the weight of the CEBA loan repayments, rising commercial rents, and the highest labor costs in history. In 2026, the cumulative effect of these pressures will lead to a wave of bankruptcies that will shatter the Canadian labor market. When the mom-and-pop shops go under, they are replaced by multinational corporations, or nothing at all. This is the homogenization of Canada. Our streets are losing their character, and our economy is losing its resilience. The emotional pain of seeing a business you spent 20 years building vanish in a few months is a trauma being felt in every town from Halifax to Victoria.
The curiosity gap is, why is the federal government making it harder for local entrepreneurs to survive while providing billions in subsidies to foreign battery plants? The shadow fact is that the Canadian economy is being corporatized at the expense of the middle-class entrepreneur, and 2026 is the year the transition becomes permanent.
The CPP and OAS illusion is another storm cloud on the horizon. Many Canadians are banking on their government pensions to save them in retirement, but the math is frightening. Inflation has far outpaced the cost of living adjustments in these programs. By 2026, the purchasing power of a CPP check will be a fraction of what it was a decade ago. We are looking at a generation of seniors who will be forced back into the workforce just to pay for their property taxes and medication. This is the retirement crisis that no one is talking about. The visceral pain of working a minimum wage job at 75 because your guaranteed pension won't cover the rent is a looming reality for millions. The shadow fact here is that the pension funds themselves are heavily invested in the very real estate market that is about to hit the 2026 cliff. If the housing market corrects, the solvency of these funds becomes a question of national security. You were told to work hard, pay your taxes, and the system would take care of you. In 2026, you will find out that the system was built on a set of assumptions that no longer exist. The safety net is fraying, and the drop is a long way down.
The shadow fact of Canadian immigration is not about the people, but about the math of absorption. We are inviting hundreds of thousands of new Canadians to join a dream that is currently on fire. When they arrive, they find a housing market that is closed to them and a healthcare system that is failing. This creates a newcomer trap, where highly skilled immigrants are forced into low-wage survival jobs just to afford a room in a shared basement. This isn't just bad for them, it's bad for the entire social fabric. By 2026, the tension between the promise of Canada and the reality will reach a breaking point. This is the visceral pain of a nation losing its reputation. Canada was once the gold standard for immigration and integration, but we have turned it into a desperate attempt to prop up a failing GDP. The curiosity gap here is, what happens when the rest of the world realizes the Canadian dream is a financial mirage? If the flow of new capital and people stops, the entire 2026 scenario becomes infinitely worse. We are addicted to growth, but we have forgotten how to sustain it. We are building a skyscraper on a foundation of sand, and the tide is coming in.
Let's discuss the digital loonie and the end of financial privacy. There is a quiet push toward a central bank digital currency, CBDC, in Canada. While it's marketed as convenience, the shadow fact is that it represents the ultimate tool for financial control. In a world of digital currency, the government can track every transaction, implement programmable money that expires if not spent, or freeze the assets of anyone who dissents. As we approach the 2026 crisis, the push for a CBDC will intensify as a solution to the economic chaos. This is the ultimate loss of sovereignty for the middle class. The emotional pain here is the loss of freedom. You've worked for your money, but you no longer truly control it. Imagine a world where your ability to buy gas or meat is limited by a social credit or carbon footprint score. This isn't science fiction. It's the logical conclusion of the path we are on. The 2026 storm will be used as a pretext for emergency measures that will change our relationship with money forever. Are you holding assets that exist outside of the traditional banking system, or is your entire life's work one delete key away from vanishing?
The intergenerational theft is the most heartbreaking aspect of the 2026 storm. We are effectively stealing from the future to pay for the mistakes of the present. Young Canadians today are the first generation in our history who will be demonstrably worse off than their parents. They are being priced out of their own country, forced to delay starting families, and burdened with a national debt they didn't sign up for. This is the visceral pain of a parent watching their child struggle despite doing everything right. The shadow fact is that the current wealth of the boomer generation is tied up in the home equity that is preventing their children from owning a home. It's a circular tragedy. In 2026, as the renewals hit and the economy slows, this intergenerational war will move from the dinner table to the ballot box. The curiosity gap is, how does a society survive when its youth no longer has a stake in the future? When the dream is dead, what is left to hold us together?
The 2026 cliff isn't just a financial event, it's a moral one. We are deciding what kind of country we want to be, and right now, the answer is a country that eats its young. The currency devaluation shadow is the reason your $100 grocery bill feels like $200. The Canadian dollar is being systematically debased. Every time the government runs a massive deficit, they are essentially printing the difference, which dilutes the value of every dollar you have in your bank account. By 2026, if this trend continues, the loonie will be a shadow of its former self. This is why hard assets like gold, silver, and even Bitcoin have seen such massive interest. Canadians are looking for a life raft. The visceral pain of watching your life savings lose 10% of their value every year, while the official inflation rate says 3%, is a form of gaslighting that is driving people to the edge. This is the invisible tax. You don't see it on your pay stub, but you see it every time you try to book a flight or buy a car. The curiosity gap is, what happens when the world loses faith in the Canadian dollar as a stable store of value? If we become a petro-state without the petro-wealth, our standard of living will collapse to levels not seen since the 1930s. The 2026 storm is the moment the global markets will pass their final judgment on Canada's fiscal sanity. The healthcare mirage is the most dangerous part of the Canadian identity. We pride ourselves on free healthcare, but in 2026, we will realize that free often means unavailable. The system is collapsing under the weight of an aging population and a lack of investment in frontline staff. The shadow fact is that Canada has fewer doctors per capita than almost any other developed nation, and the ones we have are burnt out and leaving. This is the visceral pain of waiting in pain for a surgery that is months away, or having no family doctor for your newborn child. As the 2026 financial storm hits, the provincial budgets will be slashed, and healthcare will be the first on the chopping block. We are moving toward a two-tier system by default, not by design. If you have money, you will go to Buffalo or Cleveland for treatment. If you don't, you will wait. This is the death of equality in Canada. The middle class, who pays the most into the system, is the one being let down the most. The 2026 crisis will expose the fact that our national pride is actually a crumbling facade that can no longer protect the vulnerable. The curiosity gap. How much would you pay to save your own life when the free system says no? The retail apocalypse of 2026. As the mortgage cliff drains the discretionary income of the middle class, the Canadian retail sector will face a reckoning. We are not just talking about malls. We are talking about the entire ecosystem of commerce. From car dealerships to clothing stores, the spend will simply vanish. This creates a feedback loop. Lower spending leads to layoffs, which leads to even lower spending. This is the deflationary spiral that haunts economists. The visceral pain of seeing your local mall become a collection of for lease signs is the visual representation of a dying economy. The shadow fact is that many Canadian retailers are already operating on razor-thin margins, and a 5% drop in revenue is enough to wipe them out. In 2026, we could see a double-digit drop in retail activity. This is the moment the disappearing middle class becomes a disappeared middle class. When the people who used to buy things can no longer afford them, the heart of the capitalist system stops beating. Are you positioned in an industry that can survive a total freeze in consumer spending, or are you part of the house of cards? The 2026 storm doesn't care about your resume. It only cares about your utility in a survival economy. The CRA's new arsenal. As the government's deficit balloons toward 2026, the Canada Revenue Agency is being given unprecedented powers and AI-driven tools to audit the middle class. The shadow fact is that they aren't going after the billionaires with offshore accounts. Those people have lawyers. They are going after the small business owner who missed a GST filing or the contractor who took cash. This is the taxation by harassment phase of a failing state. The visceral pain of a notice of assessment that freezes your bank account over a technicality is a nightmare that will become common. The government is desperate for cash, and you are the easiest target. This creates a culture of fear and stifles any remaining desire to take risks or start businesses. Why bother growing if the state will just take the lion's share of the harvest? In 2026, the relationship between the Canadian citizen and the state will shift from one of service to one of extraction. You are no longer a citizen to be protected. You are a resource to be mined. This is the psychological breaking point for many, leading to the internal migration, where people simply stop trying and move into the underground economy just to survive.
The survival blueprint for 2026. The storm is coming, but that doesn't mean you have to be a victim. The shadow fact of every crisis is that it is also a massive transfer of wealth. Those who are liquid, debt-free, and diversified will be the ones who buy the assets for pennies on the dollar when the dust settles. The visceral pain of the next 2 years can be avoided if you act now. This means aggressively paying down high-interest debt, maximizing your TFSA with recession-proof assets, and perhaps most importantly, developing a dual-currency income. If you live in Canada but earn in US dollars, you are essentially immune to the loonies' collapse. This is the financial lifeboat you need to build today. The curiosity gap is, why isn't this being taught in schools? Because the system needs you to be a debtor and a taxpayer to keep the wheels turning. Breaking free of the Canadian debt trap is an act of rebellion. In 2026, the people who ignored the everything is fine narrative will be the ones who inherit the next era. The storm will wash away the weak foundations, but it will also reveal the bedrock. Where do you stand?
As we close the book on this investigation into 2026, we have to face the final shadow fact. Canada is not too big to fail. No empire, no nation, and no economy is entitled to permanent prosperity. We have had a 30-year run of luck, fueled by resources and rising real estate, but the luck has run out. The 2026 financial storm is a correction of reality. It will be painful, it will be visceral, and it will change the face of this country forever. But for those who see it coming, it is also a moment of clarity. The Canadian dream isn't a house in the GTA with a massive mortgage. It's the freedom to live your life on your own terms, without being a slave to a bank or a failing state. The disappearing middle class is a tragedy, but from its ashes, a more resilient, self-reliant generation can emerge. The question isn't whether the storm will hit. The clouds are already here. The question is, what will you do with the remaining 24 months? Will you stay in the path of the flood, or will you move to higher ground? The clock is ticking, the renewals are coming, and the storm of 2026 waits for no one. This is your wake-up call. Don't hit snooze.